Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, the market's on its way. The uptrend continues thus far. And as always, the thing most concerning most investors as this new year keeps going on is when are we going to get the correction that everyone's waiting for? Everyone's been waiting for that correction. Last year we didn't quite get it. So everyone's saying, oh, we're due for that correction, so when's it going to come now? Well, I don't know when it's going to come now, but for now I know the trend is up. But what I can tell you is we're going to go through a little bit of a checklist, a few things that are going to help you stay on the right side of the market. But before we get there, let's take a look at the NASDAQ. NASDAQ's the leading index, continues to plow higher. Near-term support should be at about 41.75. Below that, we should see support between 41.25 to 4100. And let's just say the NASDAQ were to start rolling down and we start to breach the 40.70 to 40.50 level, then indeed that correction may start. But that's just one metric, and no one should just rely on one metric. So let's take a look at all the other things we're looking at. Okay, number one, distribution days. Distribution days are days of heavier selling in greater volume than the day before, and that tells us that institutions are unloading. Now, so far we have 5 distribution days. That is a high count. We've pretty much had that number of days for the last 3 months, November, December, and January. That's always a little worrisome because we know that historically, whenever we start seeing anywhere from 4 to 6 distribution days in a 5-week period, the market does tend to roll over. So that is one kind of warning signal, but then the indexes keep pushing higher, so we want to still just keep that in check and continue to monitor what's going on. Now, the second thing you want to look at is leaders. How are leading stocks acting? So the leaders in this market really are stocks like Google, Priceline, Facebook, Amazon. They're still acting well. They're pushing higher. So whether you own those or not, you do want to keep your eyes on those stocks and see if they start rolling over. That also be a tip that the market's changing. But for now, they're going up. In that space too, you can throw in some of the leading biotechs: Celgene, Biogen, Gilead, some of the drug stocks, Jazz, Alexion. If you start seeing those stocks start getting hit, then indeed we might start to correct. Then you want to look at the NYSE advanced decline line. Right now, it's hitting new highs. So again, that's confirming our uptrend. If you see this rolling over, that may be another clue. You want to keep a daily count of the amount of new highs versus new lows. Friday, basically in the markets, even though the market's sold off, you basically had 400 new highs versus probably about 30 new lows. So again, that's telling you that the trend is up. Okay, now another thing you want to take a look at is Investors Business Daily has a mutual fund index. Those are the leading mutual funds. That'll tell you again something about the underlying market. That chart also is hitting new highs. Now, one of the most important things is you want to look at the S&P 500 sectors. How are they doing? Are they confirming the uptrend, or are we starting to see defensive positions rotating? Well, right now, the financials, transports, doing very well, technology, those are growth sectors. Now, we did see a little bit slippage in the consumer cyclicals, and also utilities started to perk up. So the utilities are defensive sectors, so that may be telling you a clue. So I'll keep my eyes on the utilities and consumer staples. If they start rolling up, that may tell you, hey, maybe the market is going to take a defensive stance. Now, another important thing in this market is take a look at the U.S. dollar index. U.S. dollar index attempting to take out its November highs. The U.S. dollar can start acting stronger, and it appears like it will if the Fed continues its tapering program. That'll be good for U.S. equities, bad for commodities, and bad for bonds. Again, another little clue. And most important is we're entering earnings seasons. So we need to take a look at how the market is treating earnings. As companies report, are they forgiving them? Is good news, or is good news becoming bad news? Or is bad news if a company downs slightly downward, or the revisions are revised downward? Does the market kill the stock, or does the market kind of look past it? So measuring the sentiment that way may give you an idea of what the market's willing to do in this environment. And lastly, the most important thing is, how are your stocks doing? If your stocks are starting to lose steam, starting to give you losses, 2 things: either you're not in the right stocks, or maybe indeed the market's turning over. So whatever happens, we don't know. Corrections will come sometime or other, but right now keep this checklist in your mind, and this will tell you how to stay on the right side of the market. And as always, let price and volume be your guide. People may tell you what they think, but the price and volume is what the market is actually doing. Thank you. This is George Kachuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago. Have a great trading week.